as global market uncertainty continues to shake investor confidence. Risk appetite has deteriorated sharply amidst rising geopolitical tensions between the United States and Europe, centered around President Donald Trump's renewed push to acquire Greenland and the escalating trade and military rhetoric surrounding the situation. Alrighty, everybody. What is going on? Welcome back to another weekly fundamental video breakdown. In today's video, we're going to touch on the current market landscape. I want to briefly go over some things that I'm paying attention to in the fundamental details to be mindful of in the coming days ahead, given the current landscape is still risk off in regards to the scenarios that we had touched on in our Sunday report still playing out to this day. Total cryptocurrency market is currently down right now over $100 billion due to some fundamentals that we're going to cover in today's video breakdown. We're going to make sure that you guys understand the full landscape, what's going on, what to be paying attention to in the coming days ahead, and what could possibly shift market sentiment. Just continuing to keep you all in the loop. We are starting to pull back down into the $2.89 trillion dark pool. So let's be mindful of how price action reacts to this level, because if we close bearish beneath it, that could possibly open up the door for a deeper retracement down into 2.62 and then possibly even further down into our lower targets of 2.3 trillion, especially if things in the report that we cover today worsen. We'll then briefly touch on, obviously, of course, XRP, given some updates looking at the deltas on XRP. We'll also touch briefly on Cantoncoin. So we'll briefly touch on some levels again to be mindful of. Nothing's really changed out of those technical analysis parameters. And then once we're done the crypto aspect of today's call, we will go into detail and I'll break down my trades today on MNQ. I'll briefly go over the effort versus result that I touched on last Zoom call, how I was able to utilize that strategy at these areas of interest today to take these buys and sells. And then hopefully that'll motivate you guys to jump on. I'll open the floor up and maybe some of you all can break down your trades for today. We can ask questions and we can just have some general conversation. All right. So starting off with our Sunday report. This is again why it's so imperative that you guys pay attention to these things, because now in real time, some of the things that we had discussed in our Sunday call and our report. Sorry, excuse me. I don't remember if we had a call on Sunday. Regardless, this was our Sunday report. I believe we had a call on Monday. We didn't have a call on Sunday, but this is the report that I gave you guys on Sunday to prep for the week. And in a bearish scenario, I mentioned to you all, if inflation remains sticky and troublesome, GDP and consumption stay too strong, labor data remains resilient, Fed speakers remain hawkish, rate cuts are continuing to be pushed back, geopolitical tensions escalate and tariff uncertainty deepens, expect continued sideways price action or a pullback down into the $2.8 trillion zone, right? Which is exactly what we're currently seeing today. So let's go over today's landscape. Let's talk through what is happening, what to be mindful of, and what to pay attention to in terms of the fundamental backdrop, all right? So this is the updated report. I'll make sure to drop it in the chat for you guys after we are done on today's call so you guys can thoroughly read through it. Starting at the top, the total cryptocurrency market remains under heavy selling pressure today as global market uncertainty continues to shake investor confidence. Risk appetite has deteriorated sharply amidst rising geopolitical tensions between the United States and Europe, centered around President Donald Trump's renewed push to acquire Greenland and the escalating trade and military rhetoric surrounding the situation. With crypto now down over $100 billion on the day, markets are being driven less by technicals and more by macro and geopolitical headlines. At the center of today's volatility is the growing confrontation between the United States and European allies. Speaking from the World Economic Forum in Davos, U.S. Treasury Secretary Scott Bessent declared that the U.S. is back, super arrogant comment, framing President Trump's agenda as a return to strong American leadership. Bessent defended the administration's efforts to acquire Greenland, calling U.S. control of the territory important for national security and arguing that it would help prevent any future kinetic conflict in the Arctic, where Russia and China have been expanding their influence. You can see that snapshot from the CNBC report. Tensions escalated further overnight during Asia session rolling into London after President Trump announced 200% tariffs on French wines and champagne and criticized the United Kingdom for what he described as total weakness over the transfer of sovereignty of the Chagos or Chagos Islands to Mauritius. I have no idea what that is, but that's what's being said. In response, Denmark has sent additional troops to Greenland for a military exercise, which has raised concerns that the situation could evolve from a diplomatic standoff into a broader military and economic confrontation. I highlighted this here in bold because this is one of the key aspects of this current ongoing situation that we need to be mindful of. We'll continue to talk about this as we progress. European leaders have reacted strongly to Trump's tariff threats. France and other EU members are reportedly pushing for the use of the bloc's most powerful economic countermeasures, known as the anti-coercion instrument. I'm probably butchering that, but the ACI. We talked about this in a previous Zoom call. The ACI is designed to respond to what the EU considers economic blackmail and could open the door to coordinated retaliation against the United States trade policy. And if you guys remember in yesterday's call, we talked about this being one of the worst case scenarios, right? This would create massive economic uncertainty and turmoil in global markets. And right now, we're just seeing that uncertainty surface. So we're seeing fear, uncertainty, and doubt surface that this is a possibility. Imagine if they did enact it and it really came into fruition, what that could do for global sentiment. Okay, so we're paying attention to this too. These are the two primary highlights you guys will notice in the report. We'll talk about them briefly here in a second. European Commission President Ursula von der Leyen addressed the issue directly in Davos. I actually just got done watching this address here. You guys can watch that. It was uploaded about 4 hours ago on the World Economic Forum YouTube. And she stated that Europe can no longer rely on the old world order, and must build a more independent and resilient economic and political framework as geopolitical shocks become more frequent. Besant, however, dismissed Europe's response as predictable and suggested that their next move would be to form what he called the dreaded European Working Group to plan retaliation. He also criticized Europe's position on the war in Ukraine, arguing that European nations continue to indirectly finance the conflict by purchasing Russian energy and refined products. The rhetoric on both sides has only reinforced the sense that the geopolitical landscape is becoming more fragmented and confrontational. For markets, the key concern, this is important, is whether the current situation represents an overreaction driven by uncertainty or the early stages of a more serious escalation. Besant has warned that investors may be overreacting, similar to how the markets responded around Liberation Day last April, when fears ultimately faded and risk assets rebounded sharply. You can see that here in the screenshot of this report. I think it was from MSN that I gathered this. It says U.S. Secretary Scott Bessent, who has actively defended the effort to acquire Greenland, even though on two different occasions at least the U.S. has recognized Danish authority and warns that the market might be overreacting like it did around Liberation Day last April. This is important, okay, because as investors, we need not get too fearful, especially if the situation starts to de-escalate. And I gathered a screenshot from the Liberation Day tariff announcement where you can see this was back on April 2nd. We had a sharp market decline and a risk-off event happen in the global market sentiment. Risk assets were sold aggressively, but then once the market realized it was overreacting to the conditions and those conditions started to de-escalate and dial back, and we started to see some certainty resurface, the market had a very, very sharp recovery. Okay. So hopefully this is the scenario that we're currently living through. That's why we have the deltas, the dark pools. We need to be mindful of how price reacts around those areas of interest. Do sellers aggressively take control at those areas, or do buyers defend and push price back to the upside? And what is the sentiment around those times and areas of interest? All right. So I just thought that that was interesting because this could be a scenario that we might see unfold, right? Sell the rumor and then buy the actual news. I'm hoping that's what takes place. Man, I don't think people are ready for the worst case scenario. If we begin to see signs of de-escalation, renewed diplomacy, or constructive negotiations between the US and Europe, we would expect a sharp recovery across risk assets, including crypto. However, the downside risk still remains significant. If tensions worsen through military posturing, further tariff escalations, or the formal activation of the EU's anti-coercion instrument, or ACI, geopolitical unrest could intensify and act as a powerful catalyst for another leg lower in the crypto markets. Adding to today's risk-off environment, because it is not just this ongoing event taking place, it is a multitude of other factors, is right now the renewed uncertainty surrounding the Japanese yen and the yen carry trade. Comments from Japanese officials, Katayama, said that they cannot see or say whether they're about to intervene with the FX currency. You can see that here. Okay. This left markets on edge ahead of the Bank of Japan policy decision. You know that the markets don't like uncertainty. And so if they came out saying, hey, look, we're not going to comment on whether or not we're going to intervene with the currency or not, then markets are most likely going to continue to price in that to some extent they would if necessary. Okay. Any sudden strengthening of the yen could trigger aggressive carry trade unwinds, which historically tends to put pressure on global risk assets, including equities and crypto, like we saw back in July. I believe it was 2024, if I'm not mistaken, or 25. It was 2024. This is another key macro risk that traders are also closely monitoring. Meanwhile, uncertainty remains elevated after the U.S. Supreme Court once again delayed its rulings on Trump's tariffs. And remember, in the report that I read to you guys yesterday on Zoom, I believe that today was one of the last days that they had the ability to rule on this outcome for some weeks ahead. So obviously, of course, is going to leave markets without clarity on the legal framework surrounding the current and future trade policy. We know that the lack of resolution continues to contribute to investor caution and reinforces the fragile nature of the current sentiment. All right. Looking ahead, attention now turns to a packed macro calendar over the next 48 to 72 hours. First, President Trump is scheduled to speak tomorrow, and markets will be listening very closely for any signals of de-escalation or constructive dialogue with other world leaders. I believe that the European leaders are set to converse on Thursday, if I'm not mistaken, so be mindful of those updates and headlines as well. On Thursday, the focus shifts to inflation data, GDP, unemployment claims, and then Thursday evening for us here in the United States, Friday morning for you guys overseas, the Bank of Japan policy decision, all of which will play a major role in shaping short-term market direction. Despite today's heavy selling, crypto still remains above the key $2.8 trillion threshold, and our broader market framework from prior Zoom calls still remains intact. While volatility is likely to remain elevated in the near term, the coming days will be critical in determining whether this move is driven by fear and uncertainty that can unwind quickly or the beginning of a more sustained risk-off phase driven by geopolitical escalation. Now, if I'm going to put my own personal opinion on top of this, I think it's going to get a lot worse before it gets better. It kind of makes so much sense. We've been talking about this for the longest time in this community. Why on earth would these institutions who are about to get regulatory clarity for the first time in history buy Bitcoin or any other asset for that matter at a premium, which is where prices were trading at over the last year? It makes so much more sense for them to create some type of economic catastrophe when we all know they're high-fiving each other in the background and playing golf with each other on Sundays, right? In order to create a risk-off sentiment to drop global risk prices or risk asset prices for them to then get in at a discount when everybody is fearful and bled to death. Okay. So I personally think it's going to get worse before it gets better. But again, we just need to be mindful of the updates, the technicals, and paying attention to both of those factors combined. So rolling over first, taking a look at the total cryptocurrency market cap on the daily time frame. Remember, we've been very strong advocates of mentioning a couple of different things. I want to first take your attention back to something that I mentioned for you guys on Bitcoin's price action real quick, because we don't cover Bitcoin quite frequently, but something that I told you guys to be mindful of on the weekly time frame that has happened on Bitcoin's price that has not happened historically speaking all but one other time. And that one other time was this massive deep correction that we saw back in 2022, and that is the triple moving average crossover on the weekly on Bitcoin. I don't know if you guys remember, but I updated you guys on that just a couple of weeks ago on a Zoom call. And I had said that if we cannot hold and break back above the triple moving average, it is likely to continue to act as a resistance. And we're most likely going to start to see some clearing out of over leveraged positions that exist beneath these lows. It looks like as of time of recording, that is still set to be the case. And as I mentioned in that previous call, that has only ever happened one other time in history on Bitcoin's price action, right? Where you can see there was a triple moving average crossover, price failed to break above, hold the triple moving averages as support, and act as a resistance. Market sentiment deteriorated, and we saw a further drop and decline in price. That could possibly be what is unfolding right now. As we can see, Bitcoin's price spiked up into the triple moving average. It acted as a resistance, continued to keep price suppressed beneath it, and we are now continuing to see a risk off backdrop. All right. Just be mindful of that. If that does continue, personally seeing that we could again clear out the leverage positions on Bitcoin beneath this low, that would put Bitcoin at around 75 to 70, maybe even 65,000 per Bitcoin. That would be absolutely horrible for altcoins, considering that the vast majority of altcoins are already making new all-time lows. Just be prepared for that scenario if it were to unfold. Okay. Putting that back on your radar. Coming back over to the total cryptocurrency market cap, total triple moving averages are also acting as a resistance as well on the weekly time frame in the total cryptocurrency market. Okay. So with that being said, our last support right now for hope that this is just a fugazi and a shakeout, the current market sentiment could possibly recover, as we mentioned, is a revisitation of this base at 2.89 trillion, which for now is still holding. We're still trading above that base, even though the market sentiment is down. Let's see how over the next 48 to 72 hours, this base either holds or does not. All right. So first, risk on scenario. If we do see the market sentiment recover, we could possibly see buyers try to defend at these lower prices. If we can hold above the $2.89 trillion range, we can start to see a delta held pattern. Then it's possible we start to rekindle some of the losses, and it ends up like Secretary Scott Bessent says, markets are just overreacting. Hopefully we get some positive news from Trump and the EU leaders over the next consecutive couple of days that drive market sentiment back risk on. That would be scenario number one. Scenario number two is a brief spike of liquidity beneath the $2.89 trillion range down to 2.62 trillion, or to clear out some of the over leveraged positions that exist underneath this dark pool. Buyers then stepping back in, defending. And if at any point in time we turn the buy dark pool at 2.89 trillion back into support, again, it opens the door for further upside in a market recovery. Outside of these two scenarios, I'm not really paying attention to anything else. The question remains right now is, can we hold this as support? How does the market react around this level, an area of interest once we come into it, if we do? To the upside on our radar, we still have the $3.79 trillion threshold to overcome, which is the area of interest where we saw it act as a resistance back in October during the October 10th liquidation event. And since then, we have traded below that. I'm sure that we'll have a Zoom call well before we get to that area of interest, so no need to touch on it any further. To the downside, these levels still remain intact. If we break and close bearish beneath the $2.89 trillion buy dark pool and the sentiment continues to worsen, meaning we see a military action escalation fears unfold, we see the ACI enacted. Oh my gosh, I don't even want to think about that happening. If it does, though, and we start to see prices drop below 2.89 trillion, and on the lower time frames, we start to see lower lows and lower highs, i.e. sell delta held patterns at this dark pool, that is going to open the door for the first bearish target of 2.62 trillion. I personally don't think, like I said, market's going to stop there if we do break below this current support. That means that we're likely going to come and we're going to target the low right underneath of 2.4 trillion. That is going to open the door for a full-on breakdown to 2.3 trillion or 2.05 trillion, which are our next two bearish areas of interest, i.e. the buy dark pools. 2.3 first, 2.05 next. I'm going to go out right and assume if it gets really bad, we're probably going to go back down to $2 trillion flat. Seems like a good psychological threshold to see buyers possibly make an attempt to step back in. But if it gets worse, we're probably, like I said, most definitely going to see market makers come and target the over-leveraged positions that existed back from, think about it, remember what Secretary Scott Bessent said, Maybe the markets are getting too fearful from Liberation Day tariffs. Well, we go back to April 2025. This is where the market bottomed out during those April 2nd Liberation Day tariffs. And if the market sentiment gets worse than the Liberation Day tariff event, this is where the overleveraged positions during the Liberation Day tariff events sit. So I would go outright and assume that's where they're going to target. All right. Makes logical sense for me. Maybe from there, once we clear out that over leverage, then we can start to see buyers accumulate prices, some buy delta held patterns, and maybe then we start to see a market recovery. Either way, just be prepared for this event in the short term over the next consecutive couple of weeks if it does continue to unfold in a negative fashion. That's the scenario personally that I'm leaning more so towards as reality over the next consecutive couple of days. For me, it just makes so much sense. All right. That would probably then lead us over to the next couple of months rolling into spring, probably then take us into summertime. Maybe then towards the end of 2026, we can start to see a market recovery if that were to unfold. All right. Taking a look at XRP first. If you guys have been tracking the updates in the XRP analysis section back on January 12th, when XRP price was trading up here in this area, Scalper had called out the institutional dark pools coming in at $1.84. Those levels were met. Yesterday, we saw a attempt by buyers on the lower time frame to try to defend against sellers and absorb this massive amount of sell volume. You can see this here. They made a sustainable attempt, but have since failed. They just recently got trapped at about $2. The $2 threshold is now acting as a resistance, and we are starting to make our way back down into the $1.84 dark pool. So the question on XRP at the most immediate level is, can buyers step back in at $1.84? Can the market sentiment improve? And what does price action look like in the coming days ahead surrounding the sentiment? If we can see an improvement in market sentiment and the $1.84 threshold can hold, hopefully then we can see a buy delta held pattern. And then we can start to see an aim for a market recovery back up into the first sell dark pool at $2.27. If at any point in time market sentiment flips risk on and we do see an optimistic turnaround after $2.27 on our radar to the upside, we still have $2.56 to overcome before we expect any higher prices. Above that, the next sell dark pool comes in at $3.07. But I'm sure that we'll have another Zoom call before that takes place. Via the scenario that I think is going to happen personally, a break below $1.84 would open the door for $1.60, which is the next buy dark pool on our radar. We will see how buyers react once price comes down to these levels. If we do see a break of $1.84, it acts as a resistance, and we see sellers gain some ground here over buyers, pushing price lower. At $1.60, if we cannot see buyers step in, start to trap sellers and become aggressive enough to push price back above $1.84, then we're likely to start to see prices deteriorate further. If $1.60 acts as a resistance and sellers can break beneath it, trap buyers that try to make an attempt to defend, that is likely going to open the door for $1.27. The lowest level dark pool right now on our radar is 98 cents. I will 110% be accumulating some more XRP if we were to see those lower levels. Cantoncoin. Like I mentioned, Cantoncoin, relatively not unfazed, but maybe, I don't know, maybe they pre-priced in all this negative information ahead of time. Seems like it. Over the past 24 hours, we've actually seen a nice bounce from the high 10-cent range. We're now currently trading above the institutional dark pool at the 12,257. If the market sentiment worsens and Cantoncoin's price is affected, this could be a sell delta held pattern. You can see the high here acting as the 1, this leg to the downside acting as the break of structure, maybe this tiny retracement acting as the 3. If we start to turn the 12,257 into a resistance, that is going to open the door for a revisitation of the 0999 next. Anything below the 0999 opens the door for the lower level targets of the 08237. I'll stop there, as I'm sure we'll have another Zoom call before those levels come into fruition. But just in case, underneath the 08237, we have the 0655 and the 02602. If we can see in a risk on environment or an optimistic environment or Canton buyers pick up some aggressiveness, and we can see them trap sellers at the 12257 and it act as a support, the next hurdle that we need to overcome before we get too overly excited is the 15237, which we can clearly see has acted as a resistance before. If at any point in time we can break above these sellers that trapped buyers here at these dark pools and we can see them become aggressive, turning the 15237 into a support, then we can expect some higher targets. 18194 is the next higher target on our radar to the immediate vicinity. Above 18194 is 21363 and 24056. Those levels have not changed since the last update. Outside of that, that is really all that I'm paying attention to. Tomorrow, we have Trump's announcement, his speech. We'll be paying attention to any hopefully optimistic remarks that he can make on maybe some meetings that he's had behind the scenes with European leaders on this whole entire debacle unfolding. I believe on Thursday we then have some European leaders comments that we need to be mindful of in regards to this ongoing situation. They're supposed to have a meeting, I believe, Thursday. So we'll be paying attention to those outcomes. Outside of that, our focus is going to start to shift towards the scheduled data, as that's most likely going to create a lot of market volatility around the rate cut trajectory. Hopefully, we can see the data support rate cuts without sparking fears of a recession, which could lead to some market optimism regardless of the current risk-off backdrop in the geopolitical spectrum. We'll be attentive to that as well. Make sure that you guys are tracking all these things in the fundamental section as I update you guys on a daily basis in this channel with what's happening in the market and the market sentiment. Outside of that, though, that's all that I have for the total cryptocurrency market cap and the two assets right now that we primarily track. All right. Any questions on the crypto front before we roll over into doing some trade breakdowns?